Emerging markets continue their plunge as tensions turn to turmoil. Currencies have fallen significantly throughout 2018 versus the US dollar and continue to slide with no end in sight. This doesn't seem to be concentrated to one geographic area. It seems like the whole world is falling, leaving just a few bright spots in the US remaining. Will the contagion make its way back around? You came here for the truth, so let me unveil that for you. Today we're going to look at the continued weakness in emerging markets. I have been covering this issue over the last little while, showing you and telling you where it's going to go, and it's not looking good. We are going to get into an absolutely jam-packed episode. I have charts to show you, I have articles to show you. Let's begin with this out of Bloomberg. Record rout deepens. You can see at the top of the list, which is really the bottom, is the Argentina peso. It is down nearly 52% in 2018 alone versus the US dollar. This continues to slide. You're looking at the Turkish Lira down nearly 44%. And the Brazilian Real, which I believe since this chart was produced, it has actually turned around a little bit. Whatever it is, if it's 15%, if it's 20%, it's down significantly on the year as a whole, okay? You're looking at the South African Rand down nearly 16%, India's Rupee, and so on. There are other currencies that are just doing terribly in 2018 alone. Now, if we look at Argentina's peso, this has been declining here before 2018. So it's been going on now, but it has really accelerated throughout this time period. You're seeing markets, stock markets all around the world that are coming down. You're seeing their currencies being devalued. It is terrible to see what has been occurring here. You're looking at this weakness and it doesn't seem to stop. It accelerates. It actually snowballs. It dominoes. It continues, and there's no end in sight for this. So we are looking at this today and we have to wonder what kind of changes need to be made for this to stop. It's not going to be something simple as the government saying, we're going to fix it. We know that an IMF bailout is not going to fix it. In fact, the acceleration of their currency's decline has taken place ever since the IMF came out and said, we're going to give you $50 billion. It has actually gotten worse. So it doesn't save them. It makes it worse. That's the signal that they need it right now. They're desperate. And so the currency just drops. And in doing so, it allows corporations to come in and pick up assets for pennies on the dollar. It's a great move for these multinational conglomerates. We're looking at this here, just seeing what has occurred within Argentina. This is the article that's connected with it. It's talking about the GDP, it's talking about the IMF, and so on. But in this paragraph, it starts to get into something interesting. And they're expecting general labor strikes over the next year. Okay, further down, it talks about this particular individual here. Our salaries are constantly eroding, and pension funds, remember, are getting hit by the slump on stock and bond markets. It's hardly sustainable. You are going to witness the wipeout of people's funds. And it's going to happen right before your very eyes. They're going to have to slash. They're going to slash what people have been getting. They're going to slash perhaps what people have in their accounts, uninsured accounts, and perhaps even insured accounts. We don't know what's going to happen this time around, but I can tell you right now, it's not looking good. And that goes for Argentina and every other country that we see all around. Because this has happened before. We simply have a playbook and they're picking from that playbook. They have only a certain amount of things that they can do. And ultimately, the people always lose. That I can tell you. Now, looking at the Shanghai Composite, this is one that I've been tracking since the beginning of this year, and we can see that it has been declining quite significantly. We are now at 27.25, so from its peak, that brings us to 24% decline this year alone. The Chinese stock market, the Shanghai Composite, is down 24%. That is officially a bear market, but every time I mention it, it's like it's weird or something. I really don't understand, but that's just the way it is. I didn't make it like that. I didn't do that. Okay? Now, the Indonesian Rupiah is a currency that throughout the 90s suffered big time. And then that changed, you can see right here. But it has had, I believe it's just shy of a record low against the US dollar. If not, it's probably surpassed it by the time you're hearing this message. Regardless, we're basically in that territory again. So Indonesia's currency has been very, very weak since the financial crisis timeframe. Okay, so we're noticing that right now going on, and connected with that, I have some more information. Indonesia's rupiah slid to a 2-decade low, spurring intervention from the central bank as the meltdown in Argentina and Turkey raises scrutiny on emerging markets with current account deficits. Remember that I told you that there will be contagion and this will spread. This will domino. I told you this. Why? Because I'm some sort of genius? No, I'm not smart at all. I'm just reading the information and I can see it coming. They tell you what's going to happen. They're making it very, very, very easy to determine the fate of all currencies and stock markets because, as I said, it's all through the same playbook. They're going to do the same things over and over and over again. And we see the weakness right here in Indonesia. We see it in Turkey. We see it in Argentina. We see it in Brazil, and so on. You have to understand what's going on. It's not good. The FANG stocks cannot sustain the entire global economy. It's just a few little things that are positive today. Most of it is negative. And yet, still, those who own their FANG stocks are ignoring, putting their heads in the sand about what's going on globally. This world does not revolve around Silicon Valley. Let me repeat myself. The world does not revolve around Silicon Valley. Let's talk more about this. The rupiah's underperformance relative to the rest of emerging markets stems from Indonesia's weak external payments position, especially the current account deficit. You could point to any particular factor, but as far as I'm concerned, when you have weakness going on in the emerging markets, it will spread. They can point to anything. They could say they're not exporting enough. They could say they're not importing enough. They could say they're exporting too much. They could say they're importing too much. They could say they scratched their head. They could say they went for a walk. It doesn't matter. Nobody's paying attention. Nobody is paying attention. All they're looking for is reasons to sell off from the emerging markets right now. That's it. Anything, they make any news whatsoever, they're going to fall. That's how ridiculous these things are. I've watched traders with my own eyes trading on information that they see on CNBC. That's the kind of business that we deal with. Massive multi-billion-dollar funds are trading based on the information that they see on television. And those are run by advertisements, by big businesses coming out there and saying, you're going to promote my fund, right? You're going to do that. Here's a nice little donation to your corporation, and now you're going to produce an article. You're going to produce a 3-minute, little section on your program today talking about why you need to buy these funds, why you need to buy these stocks, and so on. This is the way it works. Money makes the world go round. Under siege, rupiah falls to 1998 lows as Turkey contagion spreads. So you can see that right there with the blue line showing you Indonesia's currency and how it has been declining. Not good. All right, but we're seeing on the left-hand side here, the longest bull market in history. Congratulations, Federal Reserve. Congratulations, Swiss National Bank. Congratulations, all of those central banks out there which have been printing the money and buying up the shares. Everyone's so happy they don't even realize that central banks now own the world. Congrats. We gave them permission. On the right hand side, you're looking at different emerging markets like the currencies right here. Emerging market FX carry trade index, looking at the MSCI emerging markets down significantly. The Japanese stock market is down significantly, but hey-oh, we got the S&P 500 up for the year. Now looking at this, I'm not going to cover it all, but if you want to pause the video, if you want to get the link in the description to see it for yourself, this is breaking down everything. I believe this was sent to me by a subscriber. I can't remember. I receive a lot of information, but basically it just breaks down what this the possibilities are. Is it positive? Is it negative? What's the outlook going on? How's their financial situation, and so on. So we get everything is in here. We got Argentina, Turkey, and so on is all in here. If you want to look at it for yourself, it's just too much to cover. Looking at it on a map view, you can see it. The highest positive, I guess you could say, are here with green, and then the further darker red we go, it looks like those are the worst rated and biggest risks, essentially. Okay, so that's what we're looking at today. I wanted to show you the map view as well, but definitely check these out for yourself if you have time. Looking at the BOJ. Now, the BOJ has been buying up basically everything. They own, I think it's something ridiculous, like 40% of the Japanese government bonds. The BOJ also owns upwards of 80% of all the ETFs in the country. I think that's ridiculous. And they're the biggest shareholder in most of the big stocks in Japan. They own everything. But what's happening now, along with the Federal Reserve, along with other central banks, is that they're decreasing they're decreasing the amount of money that they're printing. And that is, in fact, a silent taper. They haven't been necessarily saying that they're going to do this, but every month they're basically been slowing down on the amount. They're still printing. Let's get that very straight right now. But they're printing less year over year, okay? India's rupee has declined, as I mentioned previously, to a record low, and we're watching the stock market rising to a record high. Okay, so that's one thing. And then this I found was very interesting. To quote the Prime Minister of India, the postman is now a bank in himself. Strange, very strange. This, I guess this is trying to get a way to get more people to put their money in the banking system, to go cashless perhaps, to find their money in through the banking system, not dealing in cash. They don't want people holding onto cash. They want people holding onto cards. They want to make it easy for people to put their money into the system as it weakens. So this right here just, you can read the details if you're interested, but I just wanted to mention that very quickly. I have way too much to cover. I don't even know how I'm going to get through all this. Negative returns mean outflows from emerging markets could have a long way to go. Emerging market total returns, you could see how it has declined throughout this year on the left-hand side, that chart right there. Basically just showing you a decline in total returns. Moving on quickly. MSCI Asia, excluding Japan, versus the ratio between the MSCI USA. We haven't seen it this bad since the early 2000s. Obviously, emerging markets looking very, very weak right now. We're looking at that, and the US stock market being pushed up by the FANG stocks, very strong. So those two are basically colliding, and we get what we get. This right here is basically showing us the financial conditions index of the United States, of Japan. Actually, this is that is the Eurozone in blue, and Asia, excluding Japan. So you can see where those have gone over the last little while. And two more quickly. The MSCI USA has been moving up along with the S&P 500, of course, along with the NASDAQ. We're witnessing this, but take a look. Since that moment of just before the financial crisis, all these markets together, this is the MSCI emerging markets and the MSCI USA, they were just both roaring, both doing well. They both crashed down, okay? So we saw that together in sync. Then they recovered together. But something happened right at this moment right here in probably, let's say, 2011, 2010, somewhere around that point, and it really changed. So the US stocks continue to increase, whereas there's been this stagnation in emerging markets. They haven't been able to move past it. All the money has been moving in to the US, has been moving in to specifically tech stocks, and very, very much so into the FANG stocks, FANG Plus stocks in particular. Now, if you stay to the end, you're going to get the best information out of this whole video. You are rewarded for staying this long. I don't even know how long this is going to be. It's probably 20 minutes. But check this out. This is for all of those out there who were putting me down, saying that I was bringing out false information, that the Shanghai crude exchange, the Shanghai International Energy Exchange, the INE, oil futures were not going to be for those taking delivery. But check this out of Reuters. 5 companies to deliver oil through the Shanghai crude futures contract for September. 5 companies will deliver crude oil next month to buyers through the INE oil futures, the first physical settlement of the contract that China hopes will compete with the global benchmarks. Huge news, because this is a direct competitor now. A lot of individuals are coming out and saying, you're a liar, you're nothing, you don't know what you're talking about, this is not a competitor. And I was there saying that this was going to happen. It was pretty obvious. That's exactly what the whole point was to eventually deliver in crude. That's the whole point of it. It's not going to happen in the first day. It's not going to happen in the first month. But already, potentially, in the first year, they're taking delivery through this new exchange. It is huge news. Okay, I wanted to bring it to you. I'm going to end it there. If you found the video informative, please give me a thumbs up. You got to support one of the most hard-hitting financial channels out there. You got to hit that thumbs up. You got to hit that subscribe. We are heading towards 150,000 subscribers here on this channel. We are blowing past all expectations, and that is thanks to each and every one of you. I've got people all over the world watching this channel, and it's amazing. I learned so much from you. I'm very grateful for all of you, for all your comments. I try to reply to as many people as I possibly can. I spend over an hour a day in most cases replying to comments, okay? That's how much I appreciate you. Why though? Because you teach me so much. I learned so much from you. I'm just really thankful for all of you. Thanks again. If you want the financial education that was not taught to you in schools, these 2 books have it all. Check them out. Link is in the description. And if you're more interested in the audiobook, you can get that at themoneygps.com.